Hello, good afternoon. You're watching Market Fatafat on ET Now. I'm Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, a very good afternoon to you as well. Market's managing to hold on to those 22,450 levels. Not much of an excitement. That's where it's been maintaining, right? I don't think any specific...
No, the thing to note is that the fact, yes, we've been maintaining on and off, but now we've recovered from the day's lowest point. If you look at the markets, good set of recovery coming in for the benchmark indices. Take a look at Nifty Bank. That one also has recovered in trade today, but a lot of individual stocks that are moving in trade today. You will not hear complaints from either of us because all of us have plenty of stock to discuss over the course of the next 1 hour, isn't it, Vinny?
Absolutely, a lot of stocks that we will be discussing, a lot of earnings, a lot of news-based stocks also. So yes, keeping an eye out on that. Nifty as of now recovered from the day's lowest point. So let's start with all the stocks then that are buzzing in trade. And to talk about all of that today, we do have Ashish Kyal joining in with us on the technicals. From the research team, we have Ashish as well as Gaurav joining in with us. So very good afternoon to all three of you all, and thank you so much for joining in with us on Market Fatafat. Let's move on and start with the first stock that we should talk about today is Oracle Financial Services, the IT company that actually reported their numbers. Now, when you're looking at it in terms of numbers, it's not been that great of a set of numbers that's coming from them. Quarter-on-quarter basis, we saw a decline in terms of the revenues of the company, down by 10%, coming in just at 1,642 crores. Profits of the company seeing a sharper decline as well. So, with those IoT companies, seems like, this trend seems like it's continuing. We saw that for some of the other companies as well. EBIT margins, I beg your pardon, for the IT companies at 43.6% versus 46.6%. So clear pressure that's seen coming in on the operation front, even the top line and the bottom line didn't do anything exciting, Cheryl. So yes, that's why the stock is down, trading almost near the day's lowest point, 2% down till there.
All right, so that is all about Oracle Financials, but let's talk about earnings, given the fact that we have a lot of earnings actually. Even today, Mass Financial, that one has actually come out with its numbers as well. And let's take a look at what the numbers are looking like for Mass Financials. If you look at Mass Financials, their consolidated profit as well as their revenues have actually seen a good jump if you look at it, at least on a year-on-year basis. So if you look at their profit, it saw a jump of about 23% on a year-on-year basis, while the revenue from operations saw an uptick of as much as 24% on a year-on-year basis. You can see that spike in the stock. At one point in time, the stock was trading higher by about 7%, taking the stock price to the highest level since March 5th. So watch out for Mass Financial. And yes, Vinny, 5th day of gain coming in for that particular counter.
5th day of gain for that counter. But let's move on and talk about Triveni Engineering. Ashish, good afternoon. That's the first stock that you're picking out for us in terms of Triveni Engineering. What's the view that you have in terms of a target that one should be keeping for Triveni Engineering? Currently at 364 today, buzzing away in trade. What's the view? Is it time that we could see a run-up continue?
Hi, afternoon to you and all the viewers. If you look at Triveni Engineering, it has been consolidating for quite some time. But in today's session, we can clearly see a very strong breakout on the upside. The stock has managed to surpass that 350 levels also, and is sustaining above that side. It seems that the fresh leg on the upside has started. We can see the volume that has picked up substantially 3 days back, and there is a continuation now. So we can expect a target of around 380 on the upside for Triveni. And on the downside, the support for the stock is at 350 level.
So that is Triveni Engineering for you. But Ashesha, let's talk about Kotak Mahindra Bank. And yes, that has in fact support. That is in fact the stock of the day. Down 10.8%, and
Let me also mention that Gaurav did tell me that he waited longer because there was Axis Bank. Then this news flow came in as well.
So he couldn't hit for.
So he's done with Kotak Mahindra Bank. That's why Ashesha is going to be talking to us about it.
Right. So taking a detour for metals this time around, Ashesha, Kotak Mahindra Bank. We know all about it, but exactly what are the brokerages saying?
Well, absolutely. It clearly is the stock of the day, tanking in trade today, down nearly 10.5 to 11 odd percent. And brokerages, we have several brokerage notes that have come in this morning. Investec, for instance, says that they see limited impact on earnings on account of the news that came in overnight. Exposure to credit cards, meanwhile, they believe could reduce to 3.3% over the next 2 quarters, assuming no further card additions that will happen. Lower card business could impact return on assets by as much as 2.4 basis points and EPS by 1% for FY26. Jefferies, meanwhile, says that HDFC Bank faced similar action in 2020 and it took nearly 9 to 15 months for them to clear those issues. And if something like this happens, then it could impact revenue and cost for Kotak Mahindra Bank as well. The stock, of course, on the back of that action that came in on the back of brokerage notes, the stock is declining nearly 10.5% today.
Okay, Ashesha, keeping an eye out on Kotak Mahindra Bank, down almost 10-11% in trade. But today we did manage to speak to the management of LTI Mindtree. They reported us their numbers, Q4 numbers. It was a bit of a weakish number. They also missed their estimates. But Anisha actually caught up with Debashish Chatterjee, MD and CEO of the company. Let's go cross and listen to what the outlook was. What more did they have to say?
We had, we had called out that there was, higher than expected furloughs in the last quarter, which had an impact in terms of, how the quarter performed in Q4, where we had a sequential decline. And apart from that, there were a couple of specific projects in the BFSI, which had where we went through cancellations because clients reprioritized their spends. But the good news is that we pretty much closed the full year, with a record order intake. It's 5.6 billion, which is almost 15.7% up from the last year. So which is very good news. And this market conditions were difficult. We were shifting from typical discretionary spend to a longer term efficiency play. So that shift that has happened very well. We have a very balanced portfolio right now, and which also positions us very well in terms of attacking the discretionary spend as and when it opens up.
Let's hope and see when that discretionary spend does open up. But you talked about a couple of cancellations that happened. Help us understand a bit more about it in terms of what was the reason of cancellation, and do you see any other deal perhaps which is at the risk or something that you're watching out closely, or maybe the billings and the ramp ups have been a bit slower, and also any indication you want to give us for Q1 then?
No, I think this is a very specific issue pertaining to two new projects that we had started. This is totally unexpected, and these are resulting from the decisions the clients have taken in terms of reprioritizing their spends. I don't think we need to think of this recurring again. And this had an impact of 80 basis points for this particular quarter. And beyond that, we don't comment on any client-specific issues.
No, fair enough. I understand that. But from Q1 onwards, do you see a bit of a rebound in growth? And for BFSI, would you call this the bottom? Because it's been declining for what, 4 quarters now?
No, I think, if you look at the overall picture for the full year, you will see that every industry vertical that we cater to has grown on a full year basis. Now, there could be some decline in 1 quarter or 2 quarters, but we also look at the overall full year basis. So from a full year basis perspective, BFSI is grown 2+%. And, I think that is a good sign. And we definitely feel that there will be a rebound as we go along. And not only, BFSI, but I think as we look at Q1, we definitely feel that we'll be back on the growth trajectory, and it will be a broad base. It's just not BFSI.
Okay, waiting and watching for that broad-based growth. But you talked about a full year. So let me ask you about the full year question for FY25. When we started off FY24, we were all hopeful of a double-digit growth at least for LTI Mindtree. Ended the year at around 4.5%. What do you think FY25 would be like? Do you anticipate it to be at least better than FY24 with a high degree of conviction? You can say that?
Well, I think it's, if I look at the overall market scenario, the macro, the geopolitical, etc., I don't think there is anything which is significantly different than what has been in the last several quarters. So it's very early days to call it out. But I always believe that the growth that we talk about is a reflection of the portfolio of clients that we have, for the accounts that we manage. So from that perspective, I think, as we said, definitely Q1 will be a growth, and it's difficult to call out about, the full year, but the ability to execute is definitely going to be better. So our execution plan that we have put together will be definitely much more robust in FY25.
Okay, let's talk about that execution plan a bit more because in terms of the margins also, DC, I wanted your insights on that because if I look at the subcontractor expenses, they are pretty much close to the bottom. The utilization is quite high. What then would be the margin lever going forward? And when do you reach that 17 to 18% band? Do you anticipate it to be the exit rate at least for FY25?
Well, I think when you talk about margin cannot happen unless you get the revenues, and that is precisely the reason why we changed our margin plans in last quarter, where we said that we still have the overall aspiration to get to the band 17 to 18% band, but we are not going to make any uh, promise to get it in a specific time frame. But what I want to assure you is that margin is not a one quarter phenomenon. Margin is a discipline, and that discipline has to be executed quarter after quarter. So there is a very robust margin plan or rather margin program that we have within the organization, which gives me the confidence that over the next quarters we will definitely see some improvement in the margin, and we at the right time we should be able to tell you in terms of once we do the replan in terms of when we want to get to the band. But I don't think I want to focus on the margin at the cost of growth. And once the growth comes back, the margin also will come back easily.
DC, the street has been a bit worried about the attrition at the senior level. That was something we were worried about at the merger time. Didn't really happen then, but now a couple of years out, it's playing out. What's your sense on the attrition? What are you doing to stem that attrition?
Well, I think during the merger time also we had a bit of a churn, which was expected. But if I just look at the overall last 1 year since the merger has been, let's take the last 4 quarters where the merger is pretty much behind us. What you see in terms of attrition is BAU. I mean, that attrition happens everywhere, and the confidence that we have is because we had the access to 2 leadership teams, 2 mid managements. So we are able to cope with that fairly well. I mean, that is not really reflecting in terms of our results, and we are not really concerned about that. I mean, it's not good to have attrition, but we have a plan in terms of managing through that. And I don't think we should be attributing that to anything other than BAU.
Okay, business as usual, the kind of churn that we have seen. And before I let you go, DC, a word on the order pipeline and the deal momentum as well. For a lot of other companies, it's been very strong with respect to deal momentum. You, of course, have also had a record year in terms of deal wins. But in terms of the pipeline, in terms of the decision making from clients, is that on expected pace?
Well, I think the decision making is still a little cautious and a little delayed. But the good news is that what we disclose is the order intake or the order book, which is gone up almost 16% year over year. But there is a very healthy pipeline as well, so which gives us the confidence that as we close more and more deals, the order book will only increase as we go along. So decision making is still a bit slow. The clients are still a bit cautious. But at the same time, there is a lot of deal activity going on, and we are hopeful that that will fructify in terms of growth as we go along.
Welcome back. You're watching Market Fatafat on ET now, and let's continue talking about the stocks that are making headlines today. And let's talk about Dalmia Bharat. Then Gaurav, talking about this counter has come out with its earnings and a weakish set of numbers coming in, and the stock tried to make a rebound after some commentary coming from management.
Well, yes. Talking about Dalmia Bharat now, if you look at the numbers, actually revenue was more, up 20% on a quarter-on-quarter basis, but EBITDA, which is actually in focus, was down almost 16%. And the margins, if you look at EBITDA margins also, they were down to 15.2% versus the estimate of 18.5%. Apart from that, if you look at EBITDA per ton ratio, that came up at 743 rupees per ton versus the expectation of 921 rupees, which was way below the expectation. And if you look at the con call highlights also, now the management has said that they do not see any kind of strong momentum coming up in the cement prices right now, and from here on they believe that some of the cost structures in Q4 which we have seen are reversible, and because of this we may see margins to recover in coming quarters. But given that the weak set of numbers were presented by the company in Q4 earnings, we have seen that the stock reacted negatively. Right now also the stock is down 8%, and definitely this stock is going to be in focus because we have seen a significant downfall coming up in the stock in the day state.
Surely keeping an eye out on Dalmia Bharat. Bharat. But let's move on, talk about GMR Infra then. And Ashish, on the charts, what is the technicals indicating now for GMR Infra, and where do you see it headed?
See, GMR Infra had been consolidating for past few days, but today, if you look at the chart, I think it showed a very smart recovery on the upside, and the volumes are also picking up. I'm optimistic that it's going to give a breakout of the range and eventually going to manage to break above that 88 levels also. So we can aim for the target of around 92 in GMR Infra and maintaining a stop loss on the downside at 81 level.
All right, let's just focus then. Let's talk about Bharat Forge and a huge upgrade coming in for that particular counter. The stock is also very perked up in trade today. Vinny, you have Bofa that's come out with a note, upgraded the stock to a buy from an underperformed rating. They've also hiked the target price to 1450 from 1000 rupees per share. And that's why you can see the 8% up move coming in Bharat Forge today. What Bofa is saying that the trucks aren't slowing yet, the downside risk off the road. They're saying that new wheels of growth are actually accelerating for the company. They're saying three segments that are witnessing solid scale up. One is defense, the other one is passenger vehicle exports, and the third one being industrial castings. They're saying resilient business models warrant premium valuations, and therefore they've also hiked the EPS estimates by 7 to 15%. This for FY 25-26. This in order to factor up the scale up in the defense and the PV exports. Also, they're saying the models is in less severe cut in in truck revenue. So that's the reason why they are not seeing excess cut in the truck revenue. Good business model coming in for Bharat Forge, a double upgrade coming in from underperformed directly to a buy. 8% up move, Bharat Forge.
Absolutely, and new wheels of growth is what they're talking about. Ashish, do you think there are new wheels for run-up in the stock as well? Because this has already seen a very good run-up, whether you look at it in the last 1 year. So do you think there's more upside?
Yes, indeed. It looks like going to challenge the previous peak, which was made at around 1324, and that's going to be giving a very strong breakout again. So the overall trend for Bharat Forge is positive. We can see huge volume picking up today. The stock is run up sharply, so use any kind of a dip towards 1280 as a buying opportunity, and then aiming for the target of around 1380 on the upside.
All right, so that's the take coming in on Bharat Forge. But Nestle, Vinny, all about Nestle since morning 10:30 when the global company also announced its earnings. We're all waiting for Nestle to announce their earnings, isn't it? But how are the numbers? We did see a dip, then now a recovery in the stock.
So numbers were not bad, you know. Clearly, we saw a bit of a better performance coming in on the profits and the margins of the company. We saw that it beat the street estimate. So yes, that's something exciting to watch out for, because overall, when you're looking at the numbers, also in terms of the revenue growth of around 9 to 10% is what we saw, which is better than what we've seen from these other FMCG companies, whether you see HUL or even a Tata Consumers. They've not managed to see this growth, and that's what we were expecting from Nestle, that they will manage to hold their ground. That's what they did. 9% growth in revenue, profits saw growth of 27%, margins seeing an expansion. But let's not forget, maybe we could see a concern coming in going forward, because they did give a commentary in terms of the cocoa prices as well as the coffee prices, which have seen an increase. So clearly it impacts a lot of Nestle's products as well, the chocolates, the coffee side. So that's seen a sharp increase. So going forward, they are also keeping a watchful eye on that, and maybe margins could see some bit of a pressure. This time we saw an expansion, but next time maybe that's something that we may not see. Do not forget there's an exceptional item of 10 crores this time. That's mainly that the company is made in terms of a provisioning adjustment that is there versus last quarter, keeping an eye on that, and also an announcement that they've made in terms that the Nespresso is what they've launched here. They've entered into India. Definitive agreement for that is signed with Dr. Reddy's as well. So interesting to watch out for there. Key comment that I'm just going to highlight that's coming in the press release is that cereals and grains are something that are going through a structural cost increase. So that's the key that one should watch out for.
All right, so that's Nestle for you. But Shesha, let's talk about Axis Bank, another earnings candidate.
Well, absolutely, and strong set of numbers. The stock is also reacting positively, up nearly 5.5%. Net interest income came in line with what the street was working with, a growth of about 4.4% on a sequential basis. Profit after tax, meanwhile, was above what the street was working with, a growth of about 17.5% on a sequential basis. Meanwhile, we have a couple of brokerage notes that have come in this morning. Macquarie, for instance, is maintaining its outperform stance on the stock with a target price of 1300. They say strong granular deposit growth is encouraging. Profit after tax were well above what they were working with. Higher fee income, treasury gains and net interest margins partially offset higher credit costs in the quarter gone by. All in all, overall, very strong set of numbers. Brokerages have also given a thumbs up. The stock is sitting with gains of nearly 6% as we speak.
All right, so that is the take coming in on Axis Bank. Ashish, what's your view coming in on Axis Bank? Now, do you think that this will emerge as a stronger player in the private sector banking space? Because no doubt, if it was not HDFC Bank, people are talking about ICICI Bank. If not ICICI Bank, they're expecting Kotak to run up. Now, Kotak is a hit hurdle. What about Axis? Do you think now Axis will take the baton and run?
Yes, it looks like Axis has shown a very strong gap-up opening, sustaining there, the volumes are picking up, and it has also managed to break above the high that was seen in the month of March. So, looking at the overall structure and pattern, I think the correction which started in December in Axis Bank is complete now, and we are starting the next wave on the upside. We can aim for the targets of around 1200 in Axis Bank, and on the downside, one can maintain a stop loss of around 1097.
That is Axis Bank. Let's move on and talk about another bank then, an IndusInd Bank, Gaurav. This one is expected to report its numbers.
Well, yes, IndusInd Bank will come up with their numbers tomorrow, and if you look at the numbers, the street is expecting a strong set of numbers. So, for example, net interest income is expected to increase almost by 17.7% on a YOY basis. PPOP can increase by 9.7%, and we may see a little bit of moderation because of the strong loan growth offset by the high cost of funds by the bank. But if you look at profit after tax, it could increase almost by 15 odd percentage because street is now expecting provisions to go down. Apart from that, they are not expecting any kind of risk coming up in the asset side. In fact, they are actually estimating net interest margin to remain stable at 4.3%. And lastly, we have already seen that the provisional data was actually strong for the bank. Advances grew almost by 18.5%. Deposit growth was at 14.4%, which is actually slower than the streets. Slower than the other peers that had reported the provisional numbers. But this was because of the retail deposit, which the retail deposit outflow 2.7 thousand crores because of the regulatory actions taken against the fintech partner. But apart from that, it looks like the bank could come up with a good set of numbers. We may look for any kind of commentary coming up with the cost of fund and the loan growth trajectory from the bank. But all in all, good set of numbers are expected from IndusInd Bank's results, which are due today.
All right, so that is what to expect from IndusInd Bank when they report earnings today, which means it's another busy day coming in for Gaurav. But Ashish, let's talk about IEX and what's keeping this particular stock so busy. How are the charts looking for IEX now?
See, look at IEX, the stock was consolidating for quite some time, but in today's session, it has formed a strong bullish candle pattern formation. And along with that, there is also a bounce back from the important moving averages. So looks like the stock is starting the next wave on the upside. It is better to be placed on the buy side for the stock. We can expect it to reach towards the previous peak high, which is around 174 level. That can be the target. And the support for the stock is around 152.
Okay, that is IEX for y'all, keeping an eye on that one. But why do we have Vodafone Idea in focus today? Let's not forget that the FPO today, we have seen those listings that has happened over there for the Vodafone Idea FPO. We did have Kumar Mangalam Birla also talk at the FPO as well in terms of the fundraise plans. But the FPO was 18,000 crores. FPO price was 11 rupees. And look at the run-up that we've seen close that today. You know, yesterday the stock was down, but today clearly making a comeback up 6.5%. But let's listen in to the man himself, Kumar Mangalam Birla, what he had to talk about, the funds raised and the path forward in terms of the capex. Listen into it.
Well, I think the big one now is to spend the money on capex. The three big parts of that is to increase the size of the network. The second is to densify the network in areas that we are present, and third, of course, is implementing 5G selectively across the network. So that's a task cut out for us. I think that we're very happy. This is a new life for Vodafone Idea, and we look forward to being an outstanding service provider to our customers.
So on the debt servicing front, any timelines on that on that kind of?
So actually, we have only 4,000 crores of debt due to banks. So we are quite debt heavy, debt light in that sense.
So in terms of Indus Towers stake, any word on that? Whether
nothing just now. There's no definitive path that we've charted out just now.
All right, and that is my colleague Aishwarya Patil in exclusive conversation with the man himself, Kumar Mangalam Birla, talking about the way forward going ahead for Vodafone Idea. And he says that he's happy for the new life that Vodafone Idea has got via this successful FPO. But let's shift focus from Vodafone Idea. Let's talk about Neogen and why this particular counter is in focus in today's trading session. Neogen Chemicals, if you see at one point in time, was trading high by 5%. Last time I checked, now it's up about 11% or so. Kotak Institutional Equities has initiated coverage on the counter with a buy rating. And they're saying that Neogen Chemicals has first mover advantage in Indian EV battery chemical space. They're estimating 34% CAGR for the company for FY 24-29, and this will be led by the start of battery chemical revenues, a healthy business of bromine, lithium derivatives, and also they've set a target price which is actually 7.8% higher than the median estimates of all the brokerages covering this particular counter. So there you go, Neogen on that coverage of buy rating from Kotak. The stock is trading higher by 11%.
Okay, that is Neogen Chemical trading higher by 11%. But you know, just let's mark the Nifty ones, because we have seen a sharp spike up coming in the Nifty right now. 22,500 levels, above that mark is what the Nifty is trading at, up 0.5% in trade. That's the Nifty for y'all. Axis Bank leading the charts. Then we do have SBI, ICICI Bank, ITC as well as Reliance are among the companies and stocks that have been pulling the market. So interesting to watch out for there. Let's also just take a quick mark at the Nifty mid and small cap. What's that doing as well? What we're seeing in terms of Nifty mid cap also, we have seen that outperformance today coming in the Nifty mid and small cap. Nifty mid cap trading at the day's highest point, and Nifty small cap, I'm thinking, yes, it's trading at the day's highest point, up 0.8%. So clear recovery seen in the markets from the day's lowest point. Nifty about 22,500 levels. But on that note, let's just slip into a very short break. Don't go anywhere. We'll be back with more updates after the break.
If you like this video, then like, share and subscribe to ET Now.